Hello, it's Peter Rohner. I'm the CEO of GBM Resources, a Queensland-based exploration company, and looking forward to talking today about our portfolio and particularly our flagship Drummond Basin projects, epithermal gold province that we've assembled. So looking forward to talking and sharing the story with you, Matt.
Brilliant, Peter. Lovely to have you on the show. It's the first time we've met and spoken, so I'm sort of keen to understand a little bit about the mix here, because there feels like there's a lot of moving parts, and I know we're going to focus on Drummond Basin, but it'd be great to kind of get stuck in. Before we do, though, can you give me a bit of background on you and the team? Where have you come from? How did you get into this?
Yeah, look, thanks, Matt. We sort of got involved 2 years ago. The company had a really good asset portfolio. It was sort of losing, I suppose, focus and the ability to raise money and bring the shareholders along. So really a team of three of us. Peter Mullins, who's the executive chairman, a long history of exploration, company building in particularly TSXV through Aqualine and Laramide Resources, and then Lydian Resources with the Amlasar project in Armenia. So Peter had a strong affinity with epithermal gold systems in South America and in other parts of the world, and he really liked the Drummond Basin assets that GBM had assembled. So as I said, 2 years ago, Peter, myself, and which I'll talk about later, and Stephen Nano sort of really liked the assets and decided to get involved. So we helped recapitalise the company about 2 years ago, and we've been trying to take the assets forward. So a little bit more about Stephen Nano. Stephen Nano, who's our corporate sort of advisor and exploration advisor, again had a long history in South America and in the Santa Cruz district in southern sort of Patagonia. Seeing large epithermal district there, going from when MIM was involved with Cerro Negro, very underexplored region. A few 100,000 ounces, 500,000 ounce deposits here and there, turning into a province now that's multi-million ounce resources at Cerro Negro, 7 or 8 million ounces, and Cerro Vanguardia. So the three of us, as I say, got involved a couple of years ago. We liked the assets, could see the potential, and as I got involved. My background, a bit different. I'm a metallurgist and probably more of a project builder and operator. So my background's more recently been in private gold companies, developing and restarting assets, but also had a strong metallurgical background to take projects through the various study phases and into production.
Okay, so talk to me about when you say you kind of you came in a couple of years ago and restructured it. I noticed you've got kind of 3 JV projects. I assume you brought in some money as well. Can you just talk us through what you walked into and what you realised very quickly, or how did you realise very quickly what you needed to ship out and what you needed to focus on?
Yeah, look, obviously with the other assets, which I'll talk about, Drummond Basin was our focus, but we had a good asset in Victoria, in the Victorian Goldfields, which was obviously hot a couple of years ago. We're south of Fosterville. We've got a similar age package of ground. Small JORC resource there, but similar sort of epizonal, antimony, arsenopyrite gold system to Fosterville. So we sort of saw that as a nice asset, but something that we didn't want to fund ourselves. So really the strategy was to get all these peripheral assets, funded with strong JV partners, or spun out or sold. So we've systematically over the last 2 years, basically, working through the other assets. So Malmsbury, we have a strong JV with Novo, who are basically, we bought a 50% interest for approximately $3.5 million of their script, and they're now funding $5 million to earn another 10%. So we're very happy with that progress. We'll talk a little bit more about that later. The Mount Morgan assets near Rockhampton, near the Drummond Basin, a little bit to the east. We're in the process of vending that out into a TSXV company, a CPC shell. So we've got an MOU, and we're getting close to signing a definitive agreement on that spin out. We've always had the Cloncurry sort of around the Ernest Henry Glencore copper gold system in northwest Queensland. We had those assets, and we've had a good, strong joint venture partner with the Japanese. Last year it was restructured, and now it's solely with Nippon Mining Australia. But they're basically funding, and we've got a very small dilution sort of rate there. So again, that's well funded. We then got involved. I suppose when I got involved in 2019, we brought in a cash flow asset, which was the White Dam heap leach operation in South Australia. In today's terms, it's probably not as core, but back in 2019, it was important for GBM. We had a market cap of about 3.5 million Aussie. We've raised $20 million since 2019, late 2019, and we've got a market cap of 75 million now. So the cash flow asset at White Dam's longer term is not core, but in the short term, it's about maximising the value of that asset, maximising the cash flow to support our exploration, budget and overhead structure, and really to get, as I said, all the peripheral assets funded by either third parties or sold, and bring all that money and focus into the Drummond Basin.
Okay.
Basically spend our cash flow.
Okay, so I do want to get on to the Drummond Basin, because that's you're positioning it as your flagship. That's what's important, where the future value lies in this company. But with regards to the peripheral projects, you said, right, we can't do these because one, they're not core to our thesis, or they're going to require a big balance sheet and access to capital, which we just don't have. Do you, as an junior explorer at that stage, very early stage, $3 million type company, go, do you know what? If we get something from them, it's all good. We'll position ourselves to try and maximize that opportunity. But if we don't, it's okay, because we believe in the Drummond Basin thesis that we've got. I mean, how do you think about it at that point?
Look, we thought they had value, but we didn't want to spend too much of our time and capital on the projects. We weren't going to give them away, so we wanted to retain some exposure and upside to the projects. So obviously the vend out, Mount Coolon will end up with 47% of, or post listing about 35% of the PSXV company. Malmsbury, we still have we can stay in at 40% or dilute down to 25% free carried through to production. So we've got exposure, but no needing to fund those projects. And Cloncurry is the same. We've got a 46% interest in that JV. The Japanese are funding it 100%. We're slowly diluting. So again, exposure to these reasonable projects in good provinces with good potential. Obviously Mount Coolon and Cloncurry, copper gold, and our focus is obviously on gold. Malmsbury, Victoria, great, lot of sizzle and obviously appeal, Victorian gold sort of rush over the last couple of years. But again, we just saw too much effort to focus down there. We're still managing the exploration program at Malmsbury, but Nova basically funding the work plan.
Right. Okay. So with Mount Coolon, Mount Coolon and Cloncurry, you retain a big chunk of that. Was that cash and shares, did you say? So I'm trying to understand,
Mount Coolon will be shares in the new relisted company.
Right.
But obviously they'll be escrowed for a while, so they won't be liquid immediately, but we'll have a reasonable stake in that entity. And then the other two are just JV interests where we're not funding.
Right. So okay. So there's a kind of 4-month hold on those shares?
No, on the TSXV spin out of Mount Coolon, it'll be a longer period where the predominant asset that's going into that vehicle.
Okay, I'm just trying to work out again. Cash flows into your business, so you can, you're not diluting shareholders in terms of what you want to try and do at the Drummond Basin. So okay, so that's a longer term hold, Mount Coolon, Cloncurry, similar. You'll end up with 10% there? Is that about right?
No, Cloncurry, we've got 46%, and we're basically diluting with the Japanese spending each year.
Right, but where do you end up when they get through to some?
If they spend the full amount, we end up with 10% for carried.
Understood.
Yeah,
but you've got no.
But it's just very slow dilution. It's very slow dilution.
No, absolutely. But there's no financial obligation on your part with either of those. And Malmsbury, you're getting a management fee for doing the exploration program there. Right. Okay. Yes. What's that look like? How much cash does that? Again, I'm trying to work out. Does that help?
It's 10 or 15. Yeah, it's 10 or 15% of the budget that they spend. So over 4 years, if they spend $5 million, it's a small management fee.
Right. And it's
not material. The material cash flow is from White Dam.
Absolutely.
And then some of the other assets, like one of our copper assets, we're selling to a uranium listed company.
Yeah, Brightland Milo. Yeah, I'll talk about that in a second. But I'm just again with Nova Resources, obviously they've got a massive land package there. Malmsbury is something that potentially the Fosterville gets dropped in every conversation. So potential is huge. I'm trying to work out what's actually happening on the ground because you're running it. Is that a big program? Is it advancing? Or
last 2021 was $1.8 million spend. We're just going into a drilling phase now. Obviously, they've got to spend roughly $1.2 million a year over 4 years to earn in the additional 10%. So the spend will be around $1 million. Tom Curry's about $750,000 to $1 million, third party funded. Yeah, so we've got about $2 million a year third party funded on those two projects. And Mount Morgan is obviously looking to raise money to fund the exploration activities post listing.
Got it. Okay, let's talk about White Dam. You talk about it's about $250,000 per month cash flow. How much of that is free cash flow, i.e., you can utilise elsewhere?
Well, that's free. I mean, we're obviously reinvesting a little bit of that money into completing the drilling that we've just finished. Some further resource upgrade work, some mining pit optimisation work. So the bulk of it's free, but we are reinvesting a little bit of that just to, I suppose, understand the value of the asset before we look at how that fits with GBM and whether we sell part of it or all of it and bring that cash back into the Drummond Basin.
Right. Okay. Understood. There's a kind of few other moving parts. So which assets sit within the Drummond Basin? Yeah.
So when we got involved in 2019, GBM had sort of a small resource at the Mount Coolon region, which is on the eastern side of the sort of Drummond Basin. We had a 330,000 ounce resource, JORC resource there. Across sort of three deposits, all within 5 or 6 kilometres of each other. So modest resource. We then acquired the Yandan resource and project off Ferris in January this year, and that we announced another 520,000 ounce resource there. Look, it's a lower grade resource, but we certainly like the exploration potential and the infrastructure that's there. It potentially is a central processing hub with all the access to the river, water, tailings dams, raw water dams, airstrip, campsite, power line. So it's a good package of land. It's got some good resources on it, got some good potential, and so again that got us sort of up to about the 850,000 ounce pack, JORC resource. And then in June this year we finally consummated a deal with Minjar. That had sort of the old GBM had a deal on the table that fell over in 2019. I sort of got it back on track and we signed the deal in June to acquire the Twin Hills project, which is really, a transformational asset in the sense that it's better quality ounces, a lot of exploration upside, drill intercepts, at 500 to 1,500 gram metre over hundreds and 200 metre zones. So, really tremendous resource. We see a lot of potential to expand that resource, and we'll start drilling that as soon as we transfer the leases over, which we're hoping to have done late this calendar year.
Okay.
So we'll start a 10,000 metre program in January on that asset.
Okay, so Twin Hills is a high grade project, and you use the word transformational there. It kind of feels like you came in 2 years ago, kind of cleaned up the balance sheet, offloaded some stuff, or JV'd, spun out and JV'd with the 2 or 3 projects there. In fact, one we didn't, so we briefly mentioned, which was the Consolidated Uranium deal that you did as well. Did that bring in cash?
Yeah, so we're about, again, it's $500,000 Canadian cash on signing, and then about $1.5 million of their shares, which are escrowed for 4 months. So that couple of $1 million will come onto the balance sheet as we finalise that deal. Got it. Early next year. Yeah.
Okay, so you all this tidying up going on, and I guess the deal you did in January, Yandan, was okay, low grade, but it came with a big cap and it's reasonably cheap from what I saw. There wasn't a lot of cash outlay, a few shares, good deal with Aris. And you're saying that's the kind of like the cornerstone we needed to be able to go off and do deals like Twin Hills. I mean, Twin Hills itself it's transformational, but will there be more like that? What are you trying to build here?
Look, when we got involved in 2019, the Drummond Basin, it's a big basin, and there's been 7 or 8 million ounces of sort of production and resources endowment from an endowment point of view. So it's very prospective. It hasn't really been explored. And one of the things Steve Nano keeps saying, it's almost like when he came back to Australia in the early sort of 2010s. It's like the Drummond Basin's been in the time capsule for 20 years. So since Ross Mining sort of had the field reasonably well consolidated in 1995, when they sort of finished, when the gold price was 450 Aussie an ounce, it's 2,400 an ounce now. It's the most wide open the field was 2 years ago. So one of our strategies really to pick up as much of the prospective ground, plus consolidate the resources. So these 3 resources are really the only time, the first time they've been consolidated under one owner. There's some additional resources at Wirrallee and a couple of other resources that we don't have. But the strategy was really about pulling the whole basin together, consolidating the known JORC resources, but then obviously our focus is about finding the next million ounce deposit, not necessarily just incrementally building the ounces on these existing resources. So
okay, but I guess where I'm trying to go to is trying to understand the mentality of you three and what you're trying to build here, because you give some clues about where you think about things. You talked about Malmsbury. It was hot 2 or 3 years ago. Fosterville hot 2 or 3 years ago, and then the market's come off in 2021, and the market moves in cycles. And this is early doors for you here. So what I'm trying to work out, how do you set this up for success when, say, gold takes off again? And how do you do that with the budget available to you? Because there's, like I said, there's lots of moving parts, and it's great getting little bits of money in from here, there, and everywhere. But what's the big plan?
Yeah, look, the focus for 2022 is really to, we've got the 1.5 million ounce under our belt. Like, how do we take that to 2 million ounces or 3 million ounces? So clearly the bigger structures, the bigger systems that we've got on our tenements, like we've got 13 or 14 known epithermal systems on our project. 3 have got JORC resources on them, or effectively 4 or 5. So there's a lot that haven't got JORC resources on. They've got resources on them. So there'll be a combination of finding the big new 500,000 million ounce high grade deposit, Jingo style, and then also in the background a little bit of incremental expansion of the resources that we have, and then starting to frame, in the background what a development scenario might look like. We think we probably need to be at least 2 million ounces in resource, maybe, so that we could get to a position of maybe having 1 million ounce in a reserve. Things are getting harder in Australia in a sense that, small projects, 50, 60, 70,000 ounces a year, it's just too small. So you need to be making at least 100, 120,000 ounces a year. Obviously, if the gold price goes to 3,000 Aussie, slightly different, it'll change again. But, at the moment, with all the regulating, burden, safety environment, do things properly, you need to have scale. So our view is less focus in the short term on, scoping studies and development scenarios, but we've got to start to frame what that looks like, but really focus on exploration and through a combination of doing it ourselves and potentially partnering with other people on some parts of our ground to keep the activity moving forward. Like, we don't want to be here in 5 years' time still poking around and, be at 2 million ounces or 2 and a bit. Like, we need to, we want to get there in a hurry. And if we can't fund it all ourselves off our balance sheet, we'll look at how we fund it with other people coming in.
Right, so you're kind of giving some clues about the environment which gold miners are operating. Yeah, great year 2020. 2021 came off a bit. Gold price is still reasonably good, but you're talking about regulations and so forth. Is this kind of like things like ESG demands from funders or regulators to say you must do things a certain way and therefore things are getting more expensive? I mean, what are you talking about?
Well, I think there's 2 things. All our resources, bar a small resource at Eugenia, are all on granted mining leases. So we've got environmental authorities, we've got granted mining leases. So the holding costs of those assets, is moderately high. They're not on. These aren't on exploration tenements. So we've got probably $1.2 million a year in holding costs just for the mining leases and the environmental authorities, and all the water quality monitoring and all the things you've got to do to do a good job on the environmental side. So for us, it's about we have to go harder and faster because if we don't, we'll just go sideways and the holding costs will kill us over 3 or 4 years.
So because if I look at your share price this year, it kind of has gone sideways, which, I say this a lot, which is if you're going sideways this year with gold, it's kind of a win because most charts have come off dramatically.
Yep.
But that kind of focuses the mind. It says, as you just said, we need to go faster or the costs are going to kill us. So how do you go? How have you decided to do that? For instance, if I look at Yandan, you're saying it's low grade, but how much money are you going to be spending on moving that? Or are you just looking at that as a camp and going to get focused on Twin Hills? I mean, how are you coming at it?
Yeah, look, we've got a budget for effectively next calendar year of about $7 million in the Drummond Basin on exploration. So about a 20,000 metre program with some geophysics and some other ancillary sort of group. We've got to advance the regional portfolio we have as well as the known targets. So as I say, about $7 million, we've got funding for that. That's sort of where the White Dam asset fits in a little bit. It's, it'll generate a reasonable amount of cash flow in the short term, so it helps support the funding. Longer term, again, is it an asset we can convert into cash, either by a partial sale or a full sale? But obviously in the short term, it's how we add value to that asset and understand what it's really worth. At that point, we don't want to sell it for a small amount of money and then find out it's actually worth a lot more than that. So that, the next 6 months, it's really just finding out what it's worth, generate, some good free cash out of it, and then look to recycle that, capital that's in that business back into the Drummond Basin.
Right. So let's get back onto White Dam. I want to understand what you're dealing with. You've got a $7 million budget. Do you have $7 million in cash today, or is that dependent on the White Dam feeding into that?
No, we've got $8 million between cash and securities. That's sort of excluding the.
How much cash? How much securities? Because securities are they're liquid, but not as liquid, right?
Yeah, we've got $3 million worth of Novo script in the original deal with Novo.
At what price?
At the current price of $1.60 something Canadian. So.
Yeah. Okay. Yeah. So it was always tough in terms of how you time selling, shares into the market. Okay, so White Dam is really, really important to you in terms of that exploration program. Is there no issues around its performance, its functionality, or anything else that we need to be aware of? Is there?
No. We're happy with the way it's generating cash. We're expanding production. Obviously, that's my skill set as a metallurgist, is squeezing that lemon harder. There's 70,000 ounces, 60 or 70,000 ounces left. Not in JORC resource in the heap, but it's about squeezing that heap harder and getting additional gold out of that heap. Longer term, the future is obviously starting another mining campaign and converting the JORC resources that we have there into into future mined ore that goes onto the heap. Obviously, that's part of the thinking about what we do with that asset, because to go into another mining campaign and do waste stripping, and before you get the revenue, there's obviously a reasonable chunk of working capital you need to fund. We don't want to fund that working capital, so that's part of the logic for either selling part of that project to fund that next phase of mining, and not do it on our balance sheet.
Right. So come back to Yandan, if I may, because like I say, you described the kind of camp that you've got there and the tailings. It sounds like it's the right location for you, and it didn't cost a whole bunch of money. How much value are you attributing to the low grade deposit there? And when do you start to understand if it can be economic or not?
Yeah, look, Yandan's got optionality. There's a high grade zone that's clearly a small underground operation, and it might be 250 to 300,000 ounce. At 3.5 to 4 grams as an underground, but it has the optionality of a larger open pit. Now, it doesn't work on its own. Our sort of view is you need the higher grade Twin Hills sort of deposit to front load the mining schedule. Maybe build a smaller mill, a couple of million tonnes a year, bring the higher grade Twin Hills and Koala Gleneva resources in, and then you can fund the strip at Yandan and maybe expand the plant to 3.5 million tonnes per annum and start to introduce that lower grade feed and keep your ounces up. But it's funded out of cash flow, not out of debt or equity. So it certainly doesn't work on its own, and that's sort of, I suppose, the strategy has been about pinning together these assets and then trying to logically piece the ore sources across. I mean, in WA, there's lots of regional mills that have trucking of ore, 100, 150 kilometres to a central mill. no different to that concept. It's obviously making sure you've got the right mix of high-grade ore to front loader, early start and smaller mill, and then expand the mill and bring those slower grade ounces in.
Okay, so that's probably where that's where I was actually going to go, which is, do you build or do you toll? So there are facilities within 150 kilometres of you where that might make.
No, not in the Drummond Basin. So there's a mill up at Pajingo, and obviously Minjar own the Twin Hills deposit, and they own the Pajingo mill, but it's sort of 250 kilometres away. So it's just too far. Yeah. So Yandan's about 60 kilometres from Twin Hills and about 45 kilometres from the Koala Gleneva trend. So nice central location. So
when you talk about small mill then, which you would have to fund, I mean, what are we talking in terms of capital expenditure for that?
Well, if you were looking at, say, a 2 million tonne per annum mill, I mean, you're looking at well over 150, well, the whole project could be, $200 plus million. So that's, what are we trying to do? We're trying to grow the resource base and start to understand what this project might frame up to be. But yeah, the key focus over the next 2 years is really drill and expand the ounce resource base. Acquisitions, there's not much, like Wirralee's potentially up for sale at some stage. We'll certainly have a look at it, but it's probably not a key asset for us. It also has a pretty big refractory resource. Being a metallurgist, I try and avoid refractory projects. So we certainly like the assets we've got, and we think we'll find a lot more ounces on the tenement package we've got.
Right. So just so your shareholders understand, and anyone looking at investing in this understands, is obviously you've got some money coming in from management fees from a couple of the JVs. You've got White Dam, and you've got the opportunity of spinning out or selling some of the non-core peripheral assets as well. Is that the way that you would try to manage this, or are we going to be needing to dip into the market to raise additional equity over the next 2 years?
Look, I think we will raise money sometime, over the next 2 years, because as I said earlier, we want to go harder at this. We don't want to just every year that we go sort of don't go as hard as we could have. So in 2019 we did about just under 4,000 metre drilling, sort of at the back end of 2020. But in 2021, we'll do about 10,000 metres. We're planning 20,000 metres next year. I'd probably prefer to do 30 or 40,000 metres, because we've got to go harder at this ground position. But we've got a big land package, a lot of targets, a lot of resources on the targets that are non-dual, either 2004 compliant or not even 2004 compliant. So there's a lot of ounces there. A number of the projects are big systems. Ilamartha, Bimbra, the Yandan corridor is a big system. So it's how do we hit those prospects harder? Joint ventures and using the joint venture model in the Drummond Basin, we will certainly examine, like we did with Malmsbury. If we can't do it all ourselves, again, rather than sitting on the ground and just going sideways, we'll look at what models make sense. The assets like Cloncurry, at the moment it's a joint venture. We could sell that asset, that interest. We could sell our Malmsbury interest. So, we'll be looking, at all the assets we've got and figuring out what's the smartest way to, minimise dilution on our shareholders and maximise our exposure to the upside of these packages of land that we've got.
So when you walked in 2 years ago, did you buy into it then, or were you
Peter Mullins and myself did a sort of emergency capital raise in 2019, and then we raised sort of $1 million just to keep the lights on, to get us through to sort of early 2020. And then we really started a much larger capital raise. We did the Malmsbury JV and raised another $5 or $6 million in April 2020. So look, it's been the EV's gone from 3 million to about 65 million. We've raised about $27 million cash over that 2 years. So we've added value, on top of the money we've raised, but that's really what we want to do: be disciplined about the acquisitions in terms of pricing, be disciplined about how we spend the money, but also be disciplined about not spreading our focus too far and wide, and maximising the value of those other assets, for the shareholders' benefit.
Okay, so you came in emergency funding, a few $100,000 there, raise 1.5, keep the lights on, and get things to give you time to work out what you needed to do. I'm guessing.
Yep.
And you obviously pay yourselves. You're not sitting there on shares, right? you get salary?
Yeah, well, the first 12 months we had a modest salary, and we got a swag of options when we came on board. And then the last 12 months we've been on a more modest salary. It's in the annual report. Certainly I'm more focused on. I'm not here for a lifestyle job. I'm here to make a success of the assets we've got, and obviously I've got a shareholding of about 2.5%, and Peter Mullins has a similar shareholding, and obviously our rewards will come through everyone succeeding in GBM.
Okay, and so I couldn't work out. You said it earlier, 20 million raised last year, was it, or did you just say 27? How much have you raised?
27 since November 19. Yeah.
Okay, and how have you split that up? And what have you done with that?
Well, as I say, we've invested in the Drummond Basin. We've invested in buying White Dam. We exercised our option to buy that asset, and invested in, I suppose, adding value to Mount Morgan and getting that ready for a spin out. And then the rest has gone into exploration and the holding costs of these tenements. As I say, the holding costs are just on the tenements, about $1.2 million a year.
Right. Can you just so I can understand, because I'm always intrigued and I'm interested about how you guys allocate capital, because you've got to do it in the most efficient way possible, right? So you got to, when you say we bought White Dam, how much was that? We invested in the Drummond Basin. What did you do? How much did you spend? Yeah,
so White Dam, we put $800,000 into to earn an option into that project through building the SART plan. We then had a JV for 13 months with Round Oak Minerals. We generated some cash out of that JV. We then exercised our option for $2.45 million. Now, again, we could have not exercised our option and sort of held that money on our balance sheet, but I believe we'll get a lot more than $2.5 million when we sort of recycle that asset and move it on. So it was sort of we had the money. We're silly not to walk away from that asset, and we think we can make more money on it. So we applied a bit of capital there. Mount Morgan, we have to do a little bit of work funding, supporting 43-101 studies for the spin out and keep the tenements in good standing. So it's really about, doing whatever value adding we need on the non-core assets, but then, be disciplined about how we get that money back, either JVing it out or selling it.
Okay, so on White Dam, sorry. So that's the numbers you spent at 800 and plus 2.4, you said? 2.2?
Yeah, so about 3.4.
3.4, right.
Yeah.
And how long does White Dam continue to throw off money for you? I mean, how long will that last?
Look, the next 12 months, it'll be pushing out that sort of 200,000, 250,000 a month free cash. Then it's going to get a little bit harder. The heat, the squeezing the lemon is going to get a bit harder. We're probably fortunate that we've had some good rain over the last few months, so we're actually starting to irrigate more and more of the heap. So we're getting probably closer to 70 or 80% of the heap being irrigated. So as we get to 100% irrigation, then the gold ounces are going to start to drop away, more quickly. But we've got some little tricks up our sleeve to try and optimise that gold extraction in the short term. But yeah, at some point it's going to get closer to making 100,000 a month and then break even, and we certainly need to be in a position to be ready for the next mining campaign, well before you get into that case where you're funding losses. So.
Okay. So,
but as I say, it's unlikely we'll be doing that. We'll be having a JV partner or selling the asset.
Great. Understood. I just wanted to be clear because a lot of questions sent in about that. And again, just on the tolling thing, the reality is your focus is drill next couple of years, right? You may raise some equities. You've got some revenues also coming in to support that, but any conversation around tolling, it's premature at the moment, is it? Look,
there is some opportunities potentially to toll. So we have had discussions previously with Minjar tolling some ore from the Drummond Basin up at Jingo. There's a new owner for the Mount Coolon mill to the northeast of the old Evolution mill. Again, they're both about 250 kilometres away. So, higher grade ore plus 2 grams, 2.5 grams probably makes sense. But, if you're down a 1.5 gram range, it's not going to really cover the costs very well. So we'll keep exploring those things. There's some heap leach potential. Obviously part of buying White Dam was to really get involved in that heap leach skill set and operating sort of capability. And then, there may be a need at some point in the future to transplant that sort of know-how. And because there are heap leachable resources at Eugenia and in Yandan. But again, it's, our North American investors probably prefer drill, go to 3 million ounce. The Australian market probably would like to see progress towards production, a little bit earlier. So, we've got to juggle these elements with the market and obviously with the market in terms of funding. The gold price gets stronger or weaker, then it'll change our focus a little bit. So.
Yeah, it's interesting you say that. The whole North American thing, which is, drill to the edge of the envelope, whereas Australia, kind of get into revenue quicker, please, and stop diluting me, seems to be the message. But would you say about how you have to, because you've got to talk to the market and there's an expectation there, you have to probably come out there slightly differently from how you would plan it if money wasn't a problem and, you maybe even if you're a private company, don't you? So you've got that dance to do. And do you enjoy that?
Yeah. Like it's a challenge. There's always, as I say, in terms of the exploration, there's the Hail Mary holes and try and find the next 100,000 million ounce, high grade epithermal deposit like Bajingo or like some of the sort of zones in Krakow, versus incremental ounce, another 100 here, another 200 there, 300 there, So we've got to, obviously have a strategy where we're focused on the big greenfields and brownfields exploration success targets, plus, bringing, the Yandan resource. We'll do a resource upgrade early next year and take, a fair chunk of that from inferred into indicated. At Twin Hills, we'll do a resource upgrade. We'll have that finished sort of towards the end of this year, and once we actually own the tenements, we'll announce a resource upgrade there in early 2022. So, you've got to keep these things moving forward, but there's a bit of a balance. We won't do really massive scoping, pre-fee studies on the project development scenario, because, if Twin Hills grows to 1.5 million ounces, then, the centre of the universe moves a bit from Yandan down to Twin Hills, and maybe there's a second node, that the first node is Twin Hills, and maybe Yandan becomes a second node of a processing plant. So, we don't want to spend money on a study that then, in a year's time is a total waste of time. So it's doing enough work to look at the options, get a better understanding of your, which way you can go, subject to other things happening. And that's really what our focus will be early next year.
Okay, fantastic. Well, look, Peter, I appreciate you talking to us and letting us know what you're up to. It's drill. Are you getting delayed at all in terms of assaying and also while we're at it, can you, inflation and supply chain and all of that wonderful stuff that people are talking about at the moment, are you being affected? Look,
a little bit. Assays, we were good until probably a couple of months ago. We were getting 2-3 week turnaround. Now we're sort of blowing out to 5, 6, 7. So that's a bit of a pain. Look, the advantage we've got is we've got multiple targets, so we can, drill an area and then move to another area, and as we get the results, we can interpret them and and then come back into that area. So we have flexibility, and certainly, next year we'll drill early in the year we'll drill Twin Hills, and if we're finding there's delays on the assay and we need more information before we can target the next holes, we'll just go and drill some of our other targets, Ilamartha, Yandan, there's a second round there. Cost pressures, look, there's a little bit. We're probably fortunate that there's a drilling company in Queensland that had a big program with Minjar at Bajingo. They've sort of cut their budgets quite substantially, so that there's plenty of rigs available. So rig availability is not an issue in Queensland. COVID, hasn't really been an issue. We've been fortunate that we've got a strong team in South Australia to run White Dam. We've got a good exploration team in Victoria, in sort of Bendigo, Castlemaine area, so that manages the Malmsbury project with the Victorian lockdowns, and we've got our base in Queensland and the Drummond Basin. So COVID really hasn't affected our ability to operate and do what we want to do. I mean, a few minor delays here and there.
Okay. And so how many drills would you be using?
Look, the plan next year is for the 20,000 metres is to get one rig started on Twin Hills and then get a second rig working on the Mount Coolon and other targets.
Okay, and then I guess you'll play it from there. Depending on what you see, you may bring in more or not.
Yep.
Okay.
Yeah, look, we could probably manage 3 or 4, but obviously, just need to work through the funding, how that would play out if we were trying to run 3 or 4 things at once.
Brilliant. Okay. In terms of cash and selling shares. Okay. Well, look, Peter, appreciate your time today. Thanks very much. Nice story. Stay in touch with us. And if you get any of those assay results back and when you get those assay back, do pick up the phone. Let us know how you get on. Okay.
Yeah, no, thanks, mate. Thanks for the invite. Good to talk.